Thank you. Thank you for joining us this afternoon, our in-person guests and also our online guests. It's our first virtual automotive outlook this year. Well, I think our first ever. Well, thank you so much. We have a really great lineup of speakers for you this afternoon. We're going to start at a macro level, and we're going to get, when Paul shows up, it's going to get really deep. So we're going to look at this EV revolution. But first, I think we can all agree that I think the last few years have been a little challenging, right? Maybe it's something called COVID and turned into a supply chain crisis and a chip shortage and the Great Resignation, and we don't have enough labor, and wages have gone up, and commodity prices, and the list kind of goes on. And to throw all into that is an EV revolution. And we've been talking about this for several years, obviously at our outlooks, but I think it's pretty well solidified in stone that this is happening, with over 200 billion plus being invested in this space. So why is this important, right? Because what is happening, what is the impact to really our middle market suppliers? And that's our client base. That's for our third parties in our room. That's your clients, it's our clients. And we are really focused on making sure that you are getting all the information you can to make really good decisions. And what we're pressed on, we're going to discuss this afternoon, is something really around what I call, the old way and the new way. But let me ask a question. Don't have to raise hands. How are you positioning yourself for the future? It's a very simple question, but it's so hard to answer. And are we going to look at it in the old way? How are you looking at strategy, right? Is it the same, been doing the same thing for 10 or 20 years? That's the way we've always done it. How about hiring? Yep, I'm going to wait till the market changes, right? How about our go-to market strategy, sales strategy? Well, yeah, I have the same, 25 customers, and those are the people I keep fishing in the same watering holes, right? How about am I using the same technology, right? Am I analyzing data the same way I always have? How about innovation? Is there not, right? Or are we going to look at it in a new way? And that's what we are just focused on, and we're very excited. We think this revolution that's happening is one of the best things and one of the greatest opportunities for many suppliers. And there are certain ones that'll say it's the death, and it could be, but you have time to change and pivot and be successful in this space, as you always have, right? How are you going to look at strategy? We have Dan Bruce here that we're going to do a fireside chat with, and look at what are the products, what are the market strategy? How do you position yourself for success? Dan is very busy right now with a lot of our clients thinking through this, and it's very, very critical. Well, how about an M&A strategy? You're saying, I'm a middle market, you're going to talk M&A? Companies have the most cash and best balance sheets they've ever had because of quantum easing, quite frankly. Over $9 trillion ended up into the market, right? How do we take advantage of that? Well, we're seeing the big players being really aggressive in doing acquisitions, vertically integrating, software, tech, you name it. You need to get on that bandwagon. We have Alex Conti is going to talk about that M&A and what's happening in that market. And we're really excited. And then Paul is going to come in and talk about the real details of what's going on in these EV, in these vehicles, and the opportunities that are really in these new platforms. And you'll be surprised at what he has to say. So where do we go? Why? And this is a slide many of you may have seen before. And you think, why is there such, you hear these, all this, such risk in these new platforms? Absolutely. Yeah, we're going to go from 1,400 plus parts in an ICE engine, right? And we're going to go probably 200 parts or less. Overall, a vehicle, EV vehicle, could have almost half the number of parts an internal combustion engine car could have. There is tremendous risk in that. But I will also tell you, there is a whole new market in, when you think of inverters and converters and chargers, electronics and software, these are companies, most of them have never been in the auto industry, never dealt with that sector. You have. It's a great opportunity to align yourself with some of these new suppliers that I'll show you in a minute. And yeah, how about these interiors? They look simple, they look clean. They are. But guess what? On the right side, there's a lot of those coming. Our prototype, our low volume production, are seeing tons of opportunities because of the number of new EV product launches. This is exciting, and it's only going to accelerate. And now, more than ever, is the time to innovate. You think, I'm a middle market company, I haven't innovated in 20 years. Where does innovation come from? You think, oh, it's from startups. Well, those are small companies. Many of our middle market companies, you can innovate better than anybody. You have. And you say, well, I get all these, opportunities, General Motors, and they just kind of just throw it away, and they don't give me any credit for anything. I'm telling you, there's a whole new OEM supply base, or OEMs, that are be very interested in what you have to offer. And you think it's happening. This is just a sample of up and coming green tech car companies, or even suppliers that are likely to be the next tier ones. Some of these that are going to be tremendously successful in how you align yourself with some of these companies. And you think of One Battery, you just saw the news on them. They took a Tesla and they put their battery in it and got it to over 700 miles on a single charge. Lots of exciting things happening in the space at a very high level. And what does this all equal? It's a tremendous transition. And what I call it, disruption, exciting disruption. You're seeing tons of vertical integration, tons of JVs. You can't open the paper between OEM, someone doing a JV, right? And tons of acquisitions happening in the space for them to vertically and get integrated into software and technology faster than ever. And it's going to accelerate into the tier ones, into the tier twos. So you need to be part of that opportunity. And you look at the host of new opportunities. When we talk about companies chasing the same OEMs, this is a dramatic impact of a whole new market. And we know many of you are taking advantage and are chasing some of these customers and are being very successful, but some aren't. So we want to make sure that, and it's not just the automotive space, commercial space, the AV space. As battery technology takes over, there's tons of new market opportunities that we are seeing for suppliers. And I had to throw this in, owning a EV for almost 3 years now. I think, of what is the one thing that'll potentially slow this train down. This is my opinion. This is me. A lot of people have different opinion, but it's inconvenience. And I can think about the days when, where's that charger? That's too far. I'm not gonna go charge. How long does it take to charge? That's too long. Oh my God. Right? And range anxiety, right? And overall, that's probably the least, because I think the car's going to become even more efficient and range is going to get better, quicker. But the infrastructure, the charging infrastructure, is going to be critical. You see the videos out there of how many times of individuals going to chargers, they don't work. They don't charge, they don't take their credit card. That'll be inconvenient, and customers are going to get, fed up. And as Americans, what are we all about? Convenience. We put gas stations on each side of the road so we don't have to turn left or right sometimes. So we are all about convenience. I'm sure we will get there, but it'll take some time. But it'll happen pretty quick. And once you get that solved, because not everyone's fortunate to have, charge your car in a garage. You live in apartments, you live in a city. There's lots of inconvenience that needs to be addressed. And why are we here today? And what is our goal? Our practice for UHY is to provide the thought leadership, the information, to be that trusted advisor, because we don't want you to end up on this screen. We don't want you to be stuck in the status quo, right? We don't want to take challenges seriously. We think there's a ton of opportunities out there for suppliers, and we want to be along for that ride. And if we're not working with you, please reach out. We'd love to work with you and help you grow into this space. But next, I want to welcome Jeff Schuster. Jeff is going to give us a real macro level view of automotive production and where we are headed. Jeff is from obviously LMC Automotive, and if you haven't heard Jeff, I mean, Jeff is everywhere. So 20 years plus experience, and we're very excited to have him here. We have a partnership with LMC, and Jeff, welcome.
Great. Thank you, Tom. Appreciate it. And yeah, I was joking with Tom earlier, there's not really a lot to talk about. So the auto industry is kind of on autopilot at the beginning of 2022, right? Nothing going on, nothing to see. I think we're about 2 to 3 weeks away from finding out what the disruption, and I say it in the bad disruption, not the good disruption that Tom was talking about, but what the bad disruption will be for 2022. So if you remember, it was February of 2020 when the wheels fell off the bus and the pandemic hit in March and everything shut down. Last year, about this time, maybe into early February, we started to get the indication that it was chips that was going to cause a problem in 2021 as we were getting through the worst of the pandemic. So what's in front of us now? I don't have the answer to that, but I will tell you about some of the issues and some of the risks that we see. So we'll start with looking at the near term and seeing some of the drivers, and then focus on the longer term as well. Get into some of that story that Tom teed up in terms of the EV revolution and the perspective that we see in the electrification. So we start at a very high level, macro level, looking at the economies. GDP obviously is a big driver, and economic activity in general is a big driver of where the automotive market is. And as we look at that, we see last year there's pretty strong correlation around where the Eurozone or the European economy, the US economy, and obviously the global, those two elements driving it, really hovering right around that 6%, 5.5% to 6% level. You can see China exceeded that, hitting around an 8% projected. Still don't have the final numbers in yet. As we progress and as we pull those numbers down, when we're at the beginning or the middle of last year, the US was projected more in the 7.5%, almost pushing an 8% growth rate. And as those rates came down, it really pushed a lot of that economic activity into 2022 and even 2023. So 2022 now is hovering in most major economies, really around that 4% level. And as we progress into 23, we come down to the 2.5% to 3% level. We could spend all day on what could derail that or some of the issues going on there. Obviously inflation, what the central banks do, not just the Fed, but other central banks, how they're dealing with the inflation issues, which is really a problem and a headwind when we look across the global marketplace. From a demand standpoint, as we look at the global light vehicle arena, really what's happened over the course of the last few months, we started to see as we progressed into the beginning of 2021, the strong recovery and ramp up. We obviously hit the speed bump of the chip shortage and the supply shortage across the world, as well as the pandemic itself. And you can see the selling rates came down. So we had a 92 million unit selling rate at the end of 2020. We came down, we were around 90 million in April. We progressed down, we were in the mid 70s through much of the fall. And then we saw things start to improve, China, India, some improvements in the US in the fourth quarter, helping to drive that number up above 80 million units. We hit an 82 million unit selling rate at the end of the year. So again, a little bit of optimism as we finish the year. Obviously still a lot of risk, still a lot of concerns with the lack of inventory both here in US, North America, but across the world. When we then look at the final tally, and I'm putting three elements in here. So we're looking at the total light vehicle market, the premium market, which there is a huge focus on premium vehicles, higher cost vehicles, to maximize that margin when you're only able to produce a certain amount of vehicles because of the shortages. Those obviously maximize, which led to pricing and some other issues, which I'll talk about. But as you can see, the premium market outperformed both at the mid-year point and then at the end of the year, the total light vehicle market. So mid-year point, total light vehicles were up 28% from 2020. They ended up about 5% as all. So there was a pretty serious deterioration of that volume again because of the supply shortage. Premiums fell at a similar rate, but still remained stronger than what we saw in the total light vehicle market. And obviously, if we look at the fully electric vehicles, the BEV market, off the chart, going from a very low base, obviously around the world, to a growth rate of over 100% when you look at the final tallies for the major markets around the world. Europe had a big piece in driving that. Obviously, China was still there, but we saw the most growth across the European market. If we fast forward to 2022, not quite yet. Well, let's look at 2021 at the level, regional level here. As I said, we ended about 5% up from 2020, 81 million units, just over that. You can see around the world, China, that acceleration at the end of the year brought China to a 4% increase. We saw more percentage-wise a stronger growth across South America, but South America was hit pretty hard in 2020, bringing volume down to 3 million units across those markets. So getting 12% of that back. Rest of Asia, that's Japan, Korea, India primarily driving the volume increase there. Moving to 2022, we see about a 6%, so a little stronger growth, but the growth has been certainly held again because of the supply disruption. So we do think things are going to improve. I'll get into some of the details around that as the year progresses, but we're off to a start of the year that is really similar to what we saw in the fourth quarter of last year. So there are some positives. We continue to see some positives in China, in India, drove some strong December numbers. Those are holding so far in January, but with some of the additional lockdowns in China and in parts of Asia, there is certainly some risk, I think, as we look at the first quarter here, because of the Omicron variant and some of the issues around that in just governmental restrictions or consumers holding back on purchases as a result. Nonetheless, we do see stronger growth in North America and in Europe, both at about a 7% increase. We're right around that same level in South America after the stronger increase in 2021. And then the rest of Asia coming in around that level as well. So there's some consistency around the world in terms of growth rates in 2022. Again, constrained to a degree, but we do see things starting to loosen up and improve, getting us to that 86 million unit level by the end of the year. So if we dive into the US and some of the dynamics driving the US outlook, what I put on here is really the SAAR pattern, the monthly seasonal adjusted annualized rate. You can see where we've come 2020, really the reverse or the mirror of 2021, where we started very strong and then saw the deterioration as the year progressed because of the inventory shortages, hitting just a 12 million unit selling rate in December, 12.4. And that brought us to the level, really, we stayed under a 15 million unit a year. So we're 14.9 for the year. As we look at the next 2 years, we're looking for marked improvement. So we're getting to 15.9, just under 16 million units is our expectation for 2022, and then just under 17 million units for 2023. So by 2023, we're getting very close to where we left off pre-pandemic. So by that time frame, as we edge into 2024, we think we'll be through a lot of that demand holdback and supply constraint, but it's going to take a while to get to normalized levels. Some of those issues that they've created, though, in the marketplace, if anyone's been out trying to find a vehicle, you'll know what I'm talking about. Not only are there no vehicles out there, but the vehicles that are out there are at a higher price. So as you can see, we continue to hit pricing highs every month. So looking at the data, pricing in the end of December, we hit $45,000 on average across all vehicles, up almost 20% from where it was a year ago. At the same time, incentive levels are down substantially, over 60% from where they were a year ago. Average incentive across all vehicles was only $1,500. So a pretty stark change in overall transactions, and really how that has impacted the purchase decisions on consumers. The thing that's saving consumers right now, and most consumers are shopping on a monthly payment standpoint, the thing that's saving them right now is a trade-in equity. If you have a vehicle to trade in, you're able to offset those declines in incentives by that increased trade-in value, which, as you can see here, was up about $4,000 on where it was a year ago, and hit almost $9,600 across the industry. If we look at the breakdown and some of the dynamics going on in the U.S., before we look at deeper dive into production levels, as you can see here, some of the issues that we saw last year, Toyota taking the reins as a top-selling OEM in the U.S. We do see Toyota continuing to leverage that volume. We had their announcement more recently where they're more optimistic with their global production levels as we look at their fiscal 2023, which starts in April. I think it's a little optimistic to talk about those right now and to suggest that they're going to grow by 20% or over 20% when there's a long runway before we get to that point. But nonetheless, they are more optimistic about that. They were hit relatively late relative to the other OEMs from a chip standpoint or a shortage standpoint, and they took advantage of that. Actually, if you can see here where you see the traditional Detroit brands lost volume relative to 2020 in 2021, Honda, Renault, Nissan, Mitsubishi, Subaru, Toyota, they all gained volume. So the Japanese, Hyundai, the Korean OEMs gained volume last year relative to 2020. Much of that, I think, is going to change as we look at 2022. Virtually all OEMs are expected to gain volume again. It's getting some of that supply back into the pipeline. From a body style standpoint, it's not a surprise that SUVs continue to grow. However, again, because of some of those constraints in burning through the existing inventory, which in many cases when this first became a problem were cars actually held up stronger than most might have expected otherwise. They might have been the bargains at the time as well when it was hard to find a deal out there. So a lot of consumers made a decision to purchase a vehicle and not the vehicle they necessarily went in to purchase initially. So I think that drove a lot of differences or skewed some of the body style changes that we normally would have expected throughout the year. The other thing, as I mentioned earlier, the premium market held up globally. Well, it also held up in the US market, which had been really holding ground, not really gaining any traction, but picked up a percentage point of market share in 2021. Okay, as we shift gears a little bit and talk about production, back to the global level, what we've done here is really indexed the volume last year and our forecast for 2022 to what we're calling a normalized average. So the average of 2018 and 2019 volume. It's not a perfect way to look at the market because there were a lot of nuances and different things going on in various markets. You still had emerging markets in China growing, adding capacity, adding volume, so shifting of things going on. But nonetheless, it does paint the picture, I think, as we look at this, that we're looking at a market that is going to improve, but not until the second half of the year. And I think that's pretty consistent with what we're expecting from the chip standpoint. If we look then historically what happened, you can see that deterioration in the second and third quarter of volume from that indexed average. So where we lost 19% in the second quarter last year, 23% in the third quarter. That was the peak of the disruption. We started to get some of that volume back when plants went back online in the fourth quarter. We're kind of holding in that mid-teens percent down as we look at the first quarter of this year. And then we start to see some improvement where we're down under 10% in the second quarter, 2%, and then we actually turn positive, but not until the fourth quarter. So again, it's a long road, I think, until we get back. We wouldn't expect inventory levels to be normalized until the fourth quarter or early 2023. So again, from a consumer perspective, it's going to be a long road before pricing likely levels off or comes down. I suspect it won't be coming down during 2022, though. This looks like this was the older one, not the updated slide that I sent earlier today. But anyway, so we'll wing it. Pretend I updated this slide. And the updated version will show you that we did have about 9.6 million units of volume that was impacted in 2021 from a chip standpoint, or from an overall standpoint. 95% of that was due to chips. You had other things like weather, petrochemical problems, obviously the pandemic or COVID restrictions themselves impact things. But as we progress and as we look into 2022, and one of the things that took place in the fourth quarter of last year was a shift in the mentality of how the manufacturers are adjusting in dealing with the shortages of parts. We had the build shy models or what I like to call it batch production, where you produce vehicles without the chips. They sit till the chips come in, the chips go in, and those vehicles are all batched out to the dealers. So we saw some lumpy sales as a result of that in the fourth quarter, and again, skewing some of the metrics that we normally would be looking at to gauge, are we out of this, are things improving? But the other thing that happened is a lot of the OEMs stopped reporting or taking plants completely down. Instead, they slowed line rates and kept the plants running. And I think that from an optics standpoint, from a communication standpoint, that gave the industry, I think, a better feeling because there's not this downtime that is being announced. We're just not talking about the fact that the plants are running at a 50% slower line rate than they normally would be. So a lot of those things are changing how we have to measure and how we look at the impact of the chip shortage. But nonetheless, as we move into 2022, we do expect to see continued disruption. We've already had some plants, announcement of some plant downtime in parts of the world. As we look forward, those levels and that peak that I talked about in the third quarter, those levels are going to continue to come down. So the expectation as we look at the year right now, it's still over a 4 million unit loss for 2022, but it's about half of what we saw in 2021. So again, when we get into the fourth quarter, we have some impact still, or some expected forecasted impact, but it's less than 1 million units each quarter on a global basis. First two quarters are going to be above that. I think we're right around 2 million units in the first quarter. We're under 2 million, 1.5 million to 2 million in the second quarter, and then we progress down. So that's the pattern right now until, as I said, something else potentially disrupts us. I think one of the issues that we've been looking at is some of those other part shortages, whether it's wire harnesses, braking components, connectors. There's all kinds of an array of things that certainly could come to light once the chip situation gets resolved. Okay, we're past the only slide that needed updating, so the rest of it will go back on course here. If we bring this back to the global level and look at light vehicle production, and this is taking a snapshot of a couple of points in time or horizons here. So we're giving you our latest forecast, which is December, the December 21 forecast, the June, kind of that mid-year point last year, and then our December 2020 forecast, or our pre-chip forecast is how we like to look at that one. And you can see how the pattern has changed. We obviously pulled a lot of volume out between June and December as things initially were expected to work themselves out, mostly in 2021, and then snap back. That didn't happen, obviously, so we're now looking at a much more conservative forecast as we look at the recovery in overall volume from a global standpoint. So we took out 10% from June to December, 8% next year, and then another 2% in 2023. And as we then look at the growth rates, we're only up about 2%. We don't have the final numbers around the world yet for 2021, so there's a mild level of a forecast here, but we did pick up some volume in China and in India, consistent with those demand increases. A lot of that was due to supply increases as well. So that drove a little bit better performance as the year ended. As we progress this year, we are in double digits. We're looking for a 12% increase. I think that's consistent with what we heard from Toyota. But again, there's a lot of things that could derail where that goes. So there's definitely some risk associated with that. Looking at inventory levels, and one of the measures that we look at are 3 different data points around the world. Looking at the major markets, the U.S., we are fortunate enough to have some inventory data that's published through one of our partners at Wards. So we use their inventory data. As you can see, that blue line representing the raw inventory level, it has bottomed and then started to edge back up. It's very slight, but we are starting to see inventory increase at the end of the year. Didn't do a whole lot to the day supply level, but nonetheless, we are seeing a little bit of an increase in inventory levels. If we look at China and Europe, these are derived measurements that we've created ourselves. So we've done a day supply and an inventory measure across Europe, and as you can see, this is a little bit of a forecast as well. The projection is that we will see a pretty stark rise in inventory, but again, not to the levels that are consistent with normalized inventory levels or the ability to sell at a normalized level. But we do see volumes in day supply increasing in Europe as well. Same thing with China. China went positive at the end of the year from an overall change in stock as we measure that between production and retail sales. So again, those increases in the production that we saw drove an increase in demand, both at the retail and the wholesale level. We measure retail because wholesale can skew things a little bit. That's really just sales to dealerships. So in this case, we are seeing that increase that is allowing for us to be a little more optimistic, even with some of the lockdown measures that have been put in place in China. So if we look at those production levels, a couple of measurements here. Again, I wanted to just try to characterize how we've changed our view and maybe are turning again beyond the worst points of the chip shortage and the production volume loss. So again, measuring to that 18-19 average, looking globally at 21 volume, and then how we've changed our 22 forecast. So globally, we are down 17% for the whole year. You can see China outperformed that. Japan, Korea took a big hit there primarily, as did India. So a 16% decline for the rest of Asia. North America, South America, and Europe all more than 20% decline last year. As we then look at maybe a little bit more optimistic view, so our 2022 forecast, how it's changed since our October forecast. So again, the beginning of the fourth quarter, we were just getting out of the peak point of the chip crisis. So we have, it's not a significant increase, but we have raised our outlook for 2022 by about 2% globally. Again, China a little bit stronger than that, picking up that additional volume. Both November and December were up substantially from where our expectations were from both the production and the sales standpoint. South America, coming off of that stronger year-end close as well, we've increased by about 4%. North America, Europe's flat right now. We're holding a more conservative view there. North America is only up about 1%. So again, holding a conservative view as those two markets were hit pretty hard last year. If we walk then from 2020 to 2022, you can see that North America and Europe, North America was barely negative, but it was negative last year. Europe was negative by about 600,000 units or 3%. So that gets us to that 76.4 number. As we progress into next year, or excuse me, this year into the end of 2022, you can see us getting to nearly 86 million units, and we've got strong growth in most markets. Not quite as strong just from a volume standpoint in South America, but we're really looking at strong volume increases in both North America and Europe. As you can see, they're both up nearly at 20% from the 2021 levels. And here's North America at a little bit closer look. Again, turning negative in the second half of last year, lost 1.6 million units. Really lost the gain that we saw in the first half of the year, holding us at that 12.9 level, just under where it was in 2020. There's still a fair amount of risk, I think, as we look at 2022, but we do expect volume to increase by that 18% level, and then push into the 16 million unit level by 2023, another 7% increase. Obviously, this is heavily dependent on what happens with the parts in general, chips in particular, and the ability of a lot of these programs that are in launch right now. Many of those are EVs, which I'll get into a little bit, but a lot of that's going to drive how that pattern looks as the end of 2022 and 2023. Okay, let's take a longer look past the short term into the medium term recovery as well as the longer term. So from a medium term standpoint, and this is taking us through where we think we get past and into a more normalized level of volume through 2025. If we look at the compounded annual growth rates here, you can see the global volume is growing at about a 6% average. So those above that are growing faster than the world. As you can see, with the exception of Western Europe, which again was hit pretty hard last year. Most of those are going to be emerging markets that are going to drive the growth of the global volume. China coming in just under where the globe is, that's going to be a key factor as well. And then we did recently upgrade Japan and Korea's volume, but still sub that 4% level with the US, both holding in that sub 4% level for that period. Now the US is going to grow at a much stronger pace through 2024. We have things leveling off. There's a lot of transition going on between traditional ICs and EVs, as well as capacity at that time. So I think that could have an impact on overall volume, but something we'll keep an eye on. Looking at the global production levels then through this horizon as well. So we have a pretty strong recovery. You're looking at a utilization rate also. The utilization is certainly taking a hit in the near term. We do see that starting to improve in 2022, and then holding and leveling off at that 70% level. So back up, that's what we would consider normal on a global basis. 80% is considered healthy in your mature markets like the US, like North America and Europe. On a global basis, 70% is considered pretty healthy. So it gets us there in that 2025, 2026 timeframe. And I think, again, once we get through the short-term risk factors really this year and next year, it looks like things should normalize. And the issues driving production will, again, be more of that transition from ICs to EVs and again, capacity associated with that. So from a segmentation standpoint, looking at the production levels, we do see that continued shift that has been occurring. We see stability in the pickup segment. We see that car segment, again, dropping over time, but leveling off in that really a third of the market level. And then SUVs overall as a big grouping approaching that 50%, but holding in the mid-40s really by the 2025 timeframe. We get closer to 50% as we get out by 2030. So one of the other things that we have been looking at is really just scoring the recovery pace at the OEM level. So in this case, we just took the year before the pandemic, so 2019 here, and compared the major OEMs by volume through that time horizon, and then very simply, if it's red, they're underperforming the 2019 volume. If it's green, they've hit or exceeded 2019 volume. And you can see as 100 equaling 2019 levels. So globally, as you can see, it takes us until 2023 to get back to 2019 levels. And again, that is dependent on what's happening with the part shortages and other disruptions. Most of your top OEMs are getting there by 2024. You can see obviously there's some that we don't expect to get there, and that in many cases is by design, by changing their strategies, with General Motors obviously going through a major transition now, changing some strategies, and 2025 doesn't give them enough runway to do so really. So getting back close to the 2019 levels, but not exceeding that. Same thing with Ford. I think those are two consistent OEMs with similar, different approaches, but similar patterns from a production standpoint. Tesla obviously greatly exceeding that with capacity coming online, not only in Austin, but in Germany as well, and substantial investment coming to increase volume there. So quite a change in their volume when you look at their 2025 versus 2019. And then when we look at the dynamics around the world and kind of look at that relative to the BEV percentage of volume in those markets, as you can see, maybe a little bit difficult. If we look at the wheel though, comparing 2019 to 2021, there was certainly some skewing during the pandemic, and because of the chip shortage, we saw obviously some shifts to markets that weren't impacted as much. China, as an example, hitting only or not impacted on a chip standpoint, but growing to almost 32% of the global volume. We see that settling back down, losing a couple of percentage points of share by 2025. North America and Europe both kind of leveling off on their declines as again that shift takes place to China. From a percentage standpoint, you can see China by 2025, it's about 22% of production is expected to be EV production. You've got substantial growth really in most markets, with the exception of South America, Middle East, and Africa primarily. So Asia, less China, so Japan, Korea starting to see some increases there. It's held back by India, so that's primarily why you have a lower percentage point. Europe approaching 20%, North America approaching 15% by that horizon. So again, a lot of this is consistent with the investment strategies and capacity investments that we've been hearing and talking about in both vehicle volumes, the GM's latest announcement of the conversion of existing plants. That's really one thing that we've been keeping a close eye on. All of these plants that have been added, that have been greenfield, you still have traditional or IC capacity that needs to get replaced, and GM is starting to make that transition from converting their existing plants to BEV plants. So we're going to see obviously this increase as we progress further and additional announcements get made. Just to kind of wrap things up in the EV space, I know Paul's going to dig into that, into the details of strategies and some of the issues driving EVs, but I wanted to put our view in place as well. Just from a sheer number of vehicles in the marketplace, and in order to measure this, we took out some of the real concentrated or experimental vehicles, those that are under 1,000 units globally in volume a year. We took those out of this measure, so with those in, the numbers would be even higher. We're really looking at, by end of the decade, more than 700 battery electric vehicles on the marketplace, and that's pure battery electric, not counting your other variants. So it's a marked transition, and it affects all segments. I think that's one of the things that has changed in the last couple of years, really is the push, and obviously through the pandemic, of the light commercial vehicles. We had the Ford announcement of the E-Transit as well, and the investment going in there. That's going to be a big market as well, not just the personal side of the business, but the commercial side. So there's definitely different strategies and different focuses in terms of vehicle initiatives. So from a volume standpoint, this is globally what we're looking at from various technologies, and there's a lot of things going on here. Obviously, you have the big push for full electrification and the hockey stick growth that still exists. We've increased our forecast primarily because of additional regs, but also the change in the adoption of the strategies from the OEMs. Many of them were forced to get there with the regulatory environment, but with the advent of the OEMs kind of buying in from a voluntary standpoint, that definitely has accelerated I think the push for better electric vehicles, the transition that we talked about from a capacity standpoint of converting IC capacity into electric capacity, but then also that investment in infrastructure that's required, and we're starting to get some noise about. Obviously, the U.S. is going to be behind the curve a little bit, but I think as we look at that big push in Europe, that's going to drive substantial growth there. When we look at the breakdown, and what we've got here is I'm looking at the U.S. U.S. is a little skewed because it's all light vehicles, so we're picking up those delivery vans and commercial vehicles in the U.S. market. When we look at China and Europe in this case, we're only looking at the personal vehicle market. We've actually just added LCVs for our next deliverable, so we'll have a stronger, more holistic picture of the light vehicle market. But nonetheless, if we look at PVs in China and in Europe, as you can see, we expect Europe to outpace China from a percentage standpoint and really approaching that 50% level by 2030, where China is really hovering and approaching the 35%. So again, strong growth. If you look at from where we are in 2021 to where we are by 2030 across all markets, it really is it's the regulatory environment. In the case of China, the technical roadmap. It's certainly growth of the regulatory, but followed by incentives in Europe driving it. And of course, the transition or the change in the administration that can be short-lived, but again, that buy-in by manufacturers and their actions and their investment has certainly transitioned our view of what we see taking place in the U.S. market as well. So 11 million units, 12 million units, and about 5 million units in the U.S. by that 2030 horizon. And here's the U.S. market in more detail, looking at that again, the BEV curve approaching that 35% level by the end of the horizon there, and you see the volume increases to nearly 6 million units of EV volume by 2030. And with that, I'm happy to wrap it up, and we have time for questions. Happy to answer some questions.
We have a couple minutes. Do we have any questions for Jeff on his production forecast? I think we can all agree. Oh, Kate.
Yeah. Yeah, and I think there's a strong possibility of that. You know, we're hearing that 23, so we get through, things start to look a little bit better, and then we get hit again. That's about the time that some of the capacity comes back or comes online. So I think that's one of the questions is, can that capacity offset that? Can it get there fast enough? It's a risk. I absolutely could see that as a risk. It's not in our base forecast right now, but certainly a risk.
I think there's still some political or economic risk too, with
absolutely
higher interest rates perspective to cool things off and normalize things. That could taper it.
That could absolutely do it, and I think that's probably a bigger risk right now.
For rate increases,
that we see demand takes a hit from the robust levels right now, and that would correct it also.
Yeah, we're definitely that could throw some water on that fire for sure. Yep.
Just out of curiosity, how are you figuring the price of oil and the interplay between the cost of oil and the cost of electricity, you know, over the next decade in your forecast?
Yeah, I mean, obviously oil's been quite volatile on the upward trend, so that certainly is a factor. And I think if that continues, you know, an acceleration of oil is in our forecast. A drastic acceleration is not. So if we do see a spike or a shock of that, I think, you know, that certainly can accelerate the trend. Then you get into other issues of right now we've recently launched a battery module to our electrification forecast, which looks at battery capacity, and we do believe there's enough right now for our levels that we're forecasting, but then you could get into potential capacity constraints at the battery level. And shortages of materials, raw materials, precious metal. You know, there's all kinds of things that potentially could cause a problem in that if all of this happens at once. So that's why there is some gradual increases that we're still expecting as a result.
One more question here.
Recently in the news, Intel announced the beginning of building 2 new plants for chips. How fast do you think U.S. production will be able to help mitigate, you know, the overall supply risk of chips? Is it a 2022, 23, 24?
I think it's more 24. So I think, and that's where it coincides with some of those predictions of shortages. Now, if that comes a little bit sooner, we might have an issue before the increased capacity gets online. But I think it's realistically, you'll see some of it in 23, I believe, based on the current plans. But I think to get full volume in there is probably 24.
Chip production is very, very complicated.
Absolutely.
We turned that over to Taiwan been about 2 decades ago, unfortunately. So, all right, excellent. Thank you so much. Great. I know, Jeff, I think you have to leave shortly. So
yeah, I can stick around for a little bit. For sure.
A little bit?
Yep.
Thank you so much. We appreciate it. Very insightful. So I want to welcome up our...
Thank you.
Yep. Thank you so much. Well, welcome up our next kind of fireside chat we're going to have. We're going to welcome up Alex Conti. Alex leads up our corporate finance, M&A. Alex has extensive experience in mergers, acquisitions, and sell side. I've worked with Alex for, a number of years. It's been a tremendous success. And so I'd like to welcome up Alex. And because of growth, we're really excited to have with us Dan Bruce. So Dan is in our consulting practice, but Dan leads our really our strategy consulting. And so this has been a very hot button, and really part of the main reason of our automotive outlook was really focused on strategy, because it is such a hot topic for sure. So thank you, guys. Appreciate it. So as we were chatting about everything else that was going on in the world, but you know, Alex, I mean, kind of how do you see the EV revolution kind of shaping the M&A market, you know, for current suppliers, and what's your thoughts on what you're seeing?
Sure. Well, I think it's overall it's sort of rejuvenated the industry. You know, when you look at you know, we have new OEMs, EV-focused OEMs that are going through, you know, a SPAC transaction, and they're now public, and they've got a $100 billion market cap, and, you know, not one vehicle has rolled off the line. There's some sort of craziness going on in the market. So I think it's obvious that we're sort of in the early innings of this mega trend that's going to play out over the next decade or decades. And so for us, you know, when we're in a deal process, I can't understate the value of the EV component enough right now. I think there's you know, a heavy focus on EV content, and when we're working with, you know, a client or a seller, you know, there's a lot of scrutiny around EV and how much content is going to EV platforms and how that plays out over time. So you know, you think about sort of the mix and the pie chart, and what a business has been doing, you know, historically, you know, 3-4 years ago, a couple years ago, today, and then obviously with, you know, the data like, you know, industry standards that Jeff was presenting with LMC, it's, you know, what is the opportunity going forward? And that plays a huge impact on ascribing value, you know, in that certain deal. So yeah, I can't understate that enough. I would say overall in our process, you know, when you get into the early stages of diligence and trying to sort of price a deal, the top 3 questions continue to be, you know, how did the business perform in 08 and 09? Even though that seems like ancient history, that's still a question. How did it perform through COVID? And then what is the EV mix? So I mean, it's front and center. There's no question about it.
Yeah, I think it's critical. We've seen some clients been very successful in making inroads in EV, early on, and that is going to pay dividends as far as enterprise value generation. And we see some others that are still lagging, and that's a little bit, production is probably lagging, more so prototype and low volume is off to the races. So Dan, we've been working on several clients together, and and there's and certainly in our client portfolio of UHY, this whole thing about EV risk, right? And I'm not in it. How do I get in it? What is the first step do you think clients should do to kind of evaluate positioning themselves for this kind of revolution that's it's not happening tomorrow, but it's going to take hold, and positioning is so important.
Yeah, no, it's a very, very common question we get. You don't see EVs everywhere yet, but you hear about it in the news. So clients are coming and, am I at risk? What do I do? What's the first step? Typically, the first step I'd say is let's go through and do an assessment of your product or service portfolio. Let's take a look at it and let's determine what your risks and opportunities are. And at least you want to bucket your products or services into kind of 3 categories. The first category being this product or service is on ICE vehicles, hybrid vehicles, and EV vehicles. So basically, no matter what happens, we're still going to, the OEMs, we're still going to need these products or services. Bucket 2 would be, this is only on ICE or hybrids. So at some point, if we transition all the way to EV, these are no longer going to be needed. And the third bucket is then going to be EV only. So this is important because, one, you want to put your products and services in these categories to first understand, from a revenue profitability standpoint, how much do I have in these buckets? And second, depending what bucket it falls in, that's going to determine kind of what the strategy is and what the next steps are going to be. So you want to have a good picture of that. That'll at least put you in a place to say, all right, now what do I do next? So getting there, having that understanding, that's going to set you up to determine what your next steps are, whether it's, do we innovate products? Do we kind of continue to use these products until their runway runs out, get the profits from those and invest those into new EV-related products? Do we maybe sell a portion of the business? Do we look to acquire some capabilities? But before you can start having those discussions, you got to have a good understanding of what's going on with your products and services currently.
No, totally agree. That is the foundation. And kind of along with that, Alex, I was thinking about, the biggest risk that we see is, is there true enterprise erosion that we're seeing as far as, if we're not getting into this EV, haven't been successful and potentially making inroads, that comes into, is there opportunities are you a consolidator or are you a target for consolidation, right?
Yeah, I mean, I think, Dan makes a good point. What bucket do you fall in? I mean, if going back to that pie chart, if 100% of your mix is on sort of, legacy IC powertrain components, then as far as, valuation and erosion, the, prognosis is bleak. But I think you have to take an introspective look at your business and understand where you should be investing. And obviously right now, as I said, we're in the early innings, and so you probably need to get a piece of this revolution. And I don't know if it's, organic innovation, products and processes that are in other areas of the vehicle. Obviously, the powertrain is one thing, but, interiors, exteriors, electronics, there's just a number of different areas. And I think as far as avoiding that erosion, you have to counteract that by looking at an organic strategy to kind of diversify away from, the legacy powertrain components, if that's what you're supplying on. And maybe that's a smaller deal to move over to some of the other, ancillary components that are going to play a bigger role in the future.
Yeah, I think that's something we're thinking about. That's why I talked about innovation, right? It's going to become, I would say many of our clients over the last several decades have been complacent and really haven't had to innovate as much. And I think it's going to become even more and more important to think like a startup. I really, really do.
And that, one point on that too, we're talking about products and bucketing them into certain groups. And this is one way we've also helped clients, because some are very obvious, right? An engine. that falls in your IC hybrid only bucket. Transmission, that one's obvious. Other obvious, exhaust, fuel tanks, starters, alternators. But then there's some that some people understand but are less obvious. So maybe you're making parts for thermal management. Today, your IC vehicles, the waste heat from the engine is used to heat the vehicle. Well, in a pure EV vehicle, you don't have an engine anymore. So you need other ways to heat that. So that's something where if you're making a component for just engines, transmissions, but some of these thermal managements, where does that fit? HVAC. Tom had a picture up earlier of the interior of a Ford with a lot of buttons and knobs, and then the Tesla. And you see in some of the traditional HVAC, you've got these vents and you kind of point them at you and they blow right at your face. Well, if you look at some of the Teslas, it's hidden. You have these kind of ambient temperatures versus this blast your face. So now if you're plastics and you're making these HVAC components, maybe it's a little bit different. Maybe it's a thinner wall. Maybe it's positioned differently. So it's not just the engines and transmissions you need to think of. There are even some less obvious areas of the vehicle that you want to dive into and see where that fits in your buckets and if that's going to be part of the erosion category we were talking about.
Yeah.
Yeah, I would just note too, when you think about interiors and losing the traditional, IC engine, that sort of blocks out a lot of road noise that the driver and passengers are used to hearing. And so there's going to be sort of a focus now on interiors, and attention is going to be given to reducing or I'll say noise attenuation products. So I think buzz, squeak, and rattle is the term, the industry term that folks use, and I think folks that are supplying those types of products are going to become more important when you think about the noise reduction that's going to have to take place in the interior of the vehicle.
Yeah, absolutely.
So not directly on EV, but it's something that's going to ride a little bit of a tailwind.
Yeah, and that's what I think is really understanding the EV is, and Paul's going to go into this this deeper dive into the EV vehicle, but there's tons of opportunity. It just needs to be, or a lot of energy needs to be put into it. So Dan, can you tell, what do you think a process is to really kind of help a client, navigate this, I would say, disruptive change, right? And how can they identify, future opportunities? Is it in EV? Is it maybe in other markets or sectors?
No, so the short answer to that question would be strategic planning. And I'll go into what kind of the formula for that is and what we do when we help clients to walk through that. But you talk about strategic planning, and there's a lot of roadblocks to that we typically hear as well. It's, your middle market companies especially, the organization's getting more lean. The leadership teams have higher responsibilities, and they don't necessarily have time to do strategic planning on top of all the other work that they're doing. So it kind of gets pushed to the side. You need to do it, but you're busy on what you're doing now, and you don't get to it. And typically a middle market company doesn't have a strategy department that's doing some of the research, the risk assessment analysis that I was talking about. So that's one roadblock to strategic planning. The other is we're talking about some very challenging, difficult, stressful, and uncertain decisions. So that's another area we're talking about, maybe acquiring or maybe expanding a product line. That's very difficult. So these are things that kind of hold up the strategic planning process. I like to, there's the question, what keeps you up at night, right? I like to say the strategic planning is part of the answer to that. You're either up all night because if you're doing it on top of your regular job, so you're up late working on it, or it's a very stressful, uncertain decision, so your mind is racing and you're up at night thinking about it. So that's where we come in with this. We have a formula. We've done it many times. We can make the process efficient. We can save time for the clients in doing that. And it's really kind of a three-step process. So the first thing you want to do, and I'm going to use examples EV related, but it wouldn't just have to be EV, but we're auto conference and this is EV specific, so we'll use that. But the first step is going to be strategic reviews. So the executive team should, at least annually, I would say maybe quarterly, be getting together to talk about these topics that we're hearing. So making sure your company's vision's in place, mission, What are our goals? What are we looking to achieve? And what are the strengths, weaknesses, opportunities, threats? And that risk assessment that I discussed earlier would maybe be a part of that or brought up again in these meetings. So you can identify early, if you were doing this over the past 10 years, you would know about these things and maybe be proactive and on top of it rather than reactive. So the first step are these meetings to just identify your goals and figure out how you're going to achieve it and put some strategic initiatives in place that basically make a roadmap for achieving those goals. The second step is going to be strategy and strategic analysis. So you've got initiatives in place. Now you need to figure out kind of how and where should we play. So digging into your core capabilities. What are the capabilities you have? What are the products you have? And looking what's out there, doing market research and analysis. What is growing? What specific components are growing? Yes, as I was saying, waste heat's going away, but what's replacing that? You still have to heat the vehicle. If we're making these components that heat the vehicle now, what's replacing it? And this is an area that we help out with a lot. Again, to usually you have day jobs. This is a lot of work and research to do. We have access to data. We've been doing this so we can help identify and determine that market research and analysis to get there. So then you figure out, here's our capabilities, here's where the opportunities are, and you have to align those. So, okay, if we're going to go this direction, is that something we can do organically? Do we have the capabilities to do it? Or, hey, is this a direction we want to go, but it may be a stretch? Do we need to maybe partner with somebody to make this happen? Should we acquire somebody to make this happen? So that's the second step in getting that together. And then the third is the strategy development, which is putting together your actual strategy. Hey, we decided that we want to go and partner. Go do it. You know, talk to the corporate finance team. They can help do that with you. We want to make an acquisition. Go find the targets. Go talk to them. Go do that. So really, that's kind of the formulaic three-step process. And if you're having those consistent reviews and doing that analysis and then placing that strategy development and plans in place, it'll help get you on the path to discover opportunities and not just be worried about the threats that potentially are coming with the EV disruption.
Yeah, no, it's not an easy process. It takes time. That's why I'm saying you need to start early and spend time on it. It is sleepless nights on some of these things. And we know, I mean, we have over the past 3 years, I'm embarrassed to mention that, I mean, not even embarrassed, it's not embarrassed the right word, but we have sold many clients. And it's been a good thing. They've been positioned to sell, but maybe Alex, you can talk about, because a lot of them didn't want to go through this, didn't want to recreate themselves. And, you know, kind of, how can you help? We've been very good at helping these companies position themselves to potentially be a target for consolidation, you know?
Yeah.
And how that impact in the market there.
Well, when the time's right, I mean, it obviously starts there and being able to have that strategy and sort of, you know, identify who you are in the mirror. But, you know, I would just say the underlying fundamentals of valuation, you know, don't necessarily change. And so, you know, the companies that have, you know, strong margins, you know, good growth trends on the top line and bottom line, low capital intensity, you know, good management teams, strong workforces, diversification in terms of, you know, customers and programs and suppliers. All that kind of goes into, you know, having a strong, you know, valuation and sort of maximizing what the market, you know, has to offer when the time is right.
Especially the workforce is important today.
Incredibly important. I mean, labor costs, you know, all that kind of goes into it. I mean, churn, you know, all those are areas of focus in terms of diligence. And so, you know, companies that have a really good report card on all those things, you know, get the premium valuation. And I think, you know, it would be inappropriate to say that a lot of middle market, you know, automotive suppliers, you know, have straight A's across the board in all those categories. And so, you know, as far as positioning, you know, our job is to kind of, you know, we can't take the spots off the leopard, but we can take attention away from the spots. And so it's kind of digging into that, you know, those certain areas. And if I use maybe customer diversity as an example, I think, again, a lot of times in automotive, you see a concentration, perhaps with a customer, with an OEM. But that can sort of be mitigated when you say, well, look at all these different programs we're supplying into, and where are you in terms of the life cycle of that program? Are you at the the start of production? Or are you toward the end of production? Have you been on that vehicle for 5 generations, or did you just win it? And so those are the types of things that we're going to kind of dig into, and that we've done in the past to kind of move a business from a if it's a 4 multiple, maybe it's a 4.5 or 5, 5.5, 6. And so in terms of an M&A deal, it only takes one buyer, and so it's only one that you have to convince to get the premium value. So
yeah, I'm going to flip that just a little bit and look the other way, as we've had tremendous success also with a lot of our high growth clients that are constantly looking for how can we help kind of through that acquisition strategy. I know through the Q of E team, or that's been very valuable for us to help that real growth.
Sure. Yeah. I'll say that one kind of starts with Dan and maybe the strategy, identifying areas of weakness or areas of improvement. And again, since the focus is on EV, you may want to position yourself to again ride the wave as this mega trend kind of plays out. But identifying do you need to acquire products or processes? Do you need closer proximity to key customers? If you've got concentration with the domestic OEMs, how do you get into maybe some of the transplants that are more in the southeast region of the country? And so once you've kind of identified that strategy, that's where we can kind of come into play and help. And so when you talk about an acquisition process, there's a bunch of different steps in terms of just identifying the right target. So we can assist with identifying targets on the basis of size, geography, products, services, and then we go out and conduct that sort of wave of outreach. We'll help with valuation. We help with coordinating with financing sources, incumbent banks, or new financing sources to kind of fund the deal. You mentioned quality of earnings and our due diligence team, so that kind of comes into play. And then of course just the final leg of it and papering the deal. So there's a lot that goes into it, but when you think of that whole process, if you go out there and you identify targets and you get some level of response from a handful of them, let's for discussion purposes say 3 of these groups respond, and they're all attractive, they're all equal, and one business is saying it's a $10 million deal, the other's saying it's 12, and the last guy's saying it's 15. If they're all the same, for the sake of the example here, well, that makes a decision pretty easy. But that optionality has value. In this case, the example, it's $5 million worth of value, and so we're capturing that because this whole thing was structured in an organized fashion. And so that's where I think we add value, and we've done very well for clients over the years.
Yeah, no, I think that's I look at our private equity clients that have grow really fast, and it's speed. Right, and our teams have been very responsive regarding that for sure. And that's I know for a lot of our certain middle market clients, like, wow, I don't even know how to go about that. I can't even think about it. Well, that's what Alex's team is here to help kind of work through that, those hurdles for sure. And so I'm going to turn it back over to Dan, and I know this is the big one that we've always we get a question all the time. Well, how do I win business with traditional and some of the we'll call it the non-traditional OEMs? How do I break into that into that world?
Sure. Yeah, I think the first step is getting some of your key messaging right. Key messaging, what I mean by that is value proposition, differentiators, and understanding how you can meet these customers' needs. So there's a lot of times I'll be talking to clients and they'll be looking to go into a meeting with a new customer or with a current customer and a new opportunity. And the meeting may evolve around just throwing ideas out there, but there isn't here's the value proposition we can provide. Here is some of the services or products that we can help. We saw this product line coming down the line. We can do X, Y, and Z for that. So having that message, having that material together when you get those opportunities, which may be rare, in front of somebody, is very important. I think the other thing to keep in mind is maybe don't focus just on who your current customers are or just the big 3. Tom had a list up earlier of a lot of different players in the EV space. So there's new OEMs and suppliers. There's still kind of this working going on where what components are the OEMs making when we're talking EV components, which ones are suppliers making, some are both. So there might be opportunities out there if you're just working with OEMs today to start talking with some of the suppliers and see if there's opportunities to get in there. So those are kind of two, getting your key messaging down and expanding your who you're talking to and thinking about who you're talking to. And we've helped put a lot of that key messaging and materials together for clients, because it's not, it seems easy, but it's not an easy thing to kind of nail in your value proposition. And that may change based on your client meeting for how you can serve, or your prospective customer meeting for how you could serve the customer. So nailing that messaging and identifying some other opportunities and potential customers, being suppliers and new EV entrants.
Yeah, because many of you know your existing customers very well. But these new customers, and some of them are, I know you hear the story, you know, whether it's Rivian or I mean, those are hard roads, and a lot of hard knocks and a lot of lessons learned. But that, knowing how you can solve a problem for them is utmost critical. And so that messaging, I think, is very much important.
And be
for sure
a little bit prepared on some of the more startups. I don't, you know, Rivian may not be a startup anymore, to have some low volumes initially.
Yep.
Payment terms may be difficult, but a little bit of investment upfront there, or working with low volumes initially could pay off later on. So that is something that we're hearing and seeing, but maybe worth a little bit of that upfront for some of the payoff and customer relationship you could get longer term.
Yeah. Like I say, we're seeing a lot of success here. It's very important that, you know, our Michigan and our Midwest supply base is successful in this transition as it evolves. I have another question, but I have any more? Do we have any questions for Alex or Dan on acquisition or Kate?
Hello.
Oh.
What do you think is the best way to assess the risk factor for some of these new startup EVs? I mean, Freon obviously was very well capitalized and continues to be, but although they're not really producing that much yet. But on some of the smaller ones, or like look at Nikola, I mean, how do you, what's your best strategy for assessing the risk there?
Sure. I think as you start working with them, you'll start to learn a lot. So you need to approach that carefully. Initially, they may ask for more from you, or more, and if you're not starting to see some of that return, you may identify that as a risk. So I think you want to make sure there's some mutual partnership there as you're doing work with them and working together. The less you see of that, maybe the more risky the opportunity is.
So you'll find a lot of these are either public companies potentially or part of SPACs. So there's tons of information and research that we look through our pitch.
I was going to say you can kind of de-risk by starting with prototype pricing.
So
we're working with a client right now. It's getting paid.
Yeah. I mean, obviously Lordstown. I get that question a lot. And, you know, we do have some research and data that we go to, but a lot of it is public information, and, you know, either in their 10Ks or wherever it is. I mean, they're pretty open about, I mean, Lordstown, I mean, from what we know, you know, they're going to, you know, you hear they're going to run out of cash in, 6 months. So, I mean, we try to watch that as much as we can, but there is a lot of information that we do have research and hands on, but it's not perfect, because that is changing, very rapidly. Faraday is another one that a lot of, some people got burned on. So I think so. We're right on time here. I want to thank Alex and Dan for joining us. And ready to bring up our next speaker. Thanks, guys. I met Paul, how many? It's probably been
5, 6, 7 years ago. Yeah.
6 years ago. And a little story, when we started our automotive outlooks, we did it in Sterling Heights, and we had we started out with maybe like 25 or 30 people, and I think Jeff was there too at the very beginning. And I got introduced to Paul, and he's like, "Oh, he knows EV, he knows everything about EVs," and we're like, "I don't even." Okay. And so Paul got up there and said, "This EV revolution is going to happen." We're both, "What? What's this guy talking about? He doesn't know anything about it. This guy's great," And it turns out that actually Paul's been pretty spot on. So we're excited to have him back. And each year we're getting a little deeper into this EV and this transformation. This is very, very important for you to pay attention. Again, I want to welcome, he's a strategic consultant with his own company. And we're very excited to have him. He's been worked with 500, Fortune 500 companies. I'll let you give the whole spiel.
All right. So actually, yes. So it was probably about 5 years ago. I gave this presentation, similar presentation, talking about really the adoption in the industry. And I remember one of the questions, because we were looking out at 2030 and saying, "Hey, at 2030." This is what we expect for EVs, and frankly, that forecast hasn't changed, and I'll explain why. And Jeff was there, and actually, I remember the conversation with Jeff, because at that point in time, the forecast that LMC had was very different, because they have more of a market-based forecast, and ours is a compliance-based forecast. So when you look at the legislation and what legislation's going to drive, 5 years ago, there was a big difference. Now what we're starting to see is the impact of the legislation on the market, and now this is the first time that actually the market forecast is higher than the compliance forecast. So what I'll do is sort of go through that and then start to walk you through, maybe I'm going the wrong way. Oh, here we go. Okay, so obviously what I'm here to talk about is EVs. Part of the reason why I put this slide up is you're probably all familiar with the idea that there are these mega trends that are really impacting the industry. But even autonomy is not going to have as significant as an impact on the automotive supply base than what EVs are. This is the opportunity for the powertrain to become the buggy whip of the 21st century. And part of what I'll go through is start to explain to you why that is, but then also, as we've talked about this presentation, and I'll just skip back to this again, the presentation has generally been, here's the impact of EVs, but I'm going to spend a little bit of time talking through, well, what's the opportunity associated with EVs? So just to level set everybody, I like to talk to people about there's 3 different planning horizons that we have. Those 3 different planning horizons, you're probably all familiar, or you're at least familiar with the first 2, which is that 12 to 18 months, which is really what we refer to as operational planning. So this is your budgeting, this is everything that you have. You then have this 3 to 5 year business planning, which we all work through. But what I want to really talk to you about is the next 7, 8 years, which I refer to as much more of the strategic planning, to get your mind into the idea of, well, what am I looking for out at 2030, and why is that going to happen, and what is most likely to be the outcome as a result. So first of all, the level set, everybody, when we're talking about really this revolution, and I would say probably 3-4 years ago, I made a boatload of money just explaining this chart to a number of New York-based private equity firms, because somebody would read a headline and wouldn't quite understand what people are talking about of electrification. So when you look at this, really this is the spectrum of electrification. And probably most of you are driving some type of electric vehicle, whether it's a micro hybrid, which is really just a simple start-stop system, or a 48-volt hybrid, okay, a mild hybrid. These are simple start-stop types of systems that is really focused on turning the vehicle off. So you've probably even, there's certain OEMs will allow you to turn off the function so that you stop the start-stop functionality. But that start-stop functionality gives you about a 15% improvement in emissions and fuel efficiency. So anyway, that's your basic lower level. Then what you have is full hybrids, okay, like the Prius is a great example of that. The Prius now comes in a plug-in hybrid, which basically all that they do, if you're looking right here, the only difference between these two vehicles is that you add a plug-in, which is about a $150 feature for the OEM, and that way you can always top off that vehicle. So you maximize the amount of EV range with that vehicle. This vehicle, all that you have is really regenerative braking to basically build up that battery reserve. So this is the spectrum. All of these have yet an internal combustion engine, but the big disruption is right here, the battery electric vehicle, and that gets rid of the powertrain. It gets rid of a lot of different systems. And what I'll talk a little bit about is not only the impact on powertrain, but some of the other systems like what Dan was talking about previously. So why is it such a big impact? Well, this is why, because what you have are all these mechanical systems today, like your entire internal combustion ecosystem, and then that's replaced by battery power, it's replaced by an electric drive motor, and then electric charger and other power electronics that power the system. So this is the buggy whip of the 21st century. So also, something people don't really appreciate, mechanical power versus electrical power. You have over 125 moving parts in a vehicle today. That goes to less than 25. So significant change in the infrastructure of the vehicle. That's the big impact. It's not just the fact that the powertrain goes away, but there's all these other impacts that we'll talk about as far as the opportunity as we go through this. The other thing is think about it from the number of parts. So, and really what we have here is an apples to oranges comparison. So if we look at it, 550 parts, which is made up of this part of the ecosystem, to less than 300. And when we get to these 300, very, very different types of components. You know, your components that go into electronics versus your components like brackets and fuel pumps and oil pumps, et cetera. So a lot different ecosystem that you've got to be appreciative of. The other thing is think about this. And this isn't the focus of my presentation. So if you want to talk about consolidation of this market, I'm happy to talk to you about that afterwards. But right here, 550 suppliers, it's 9,200 companies globally, okay? Look what happened just at the beginning of January. Icon Capital gets 2 board seats on Dana. Why is Icon Capital looking for 2 board seats on Dana? Because they see a large consolidation coming. Large consolidation coming, and it's not only going to impact the American Axles, the Danas of the world, but it's going to impact 9,200 suppliers globally. So again, I wanted to make the focus of the presentation here a little bit more about what's going to be happening as far as the opportunities for suppliers. But if you want to talk about that afterwards, I'm happy to answer questions or talk about it after the presentation. So here's what I want to walk you through, okay, quickly as part of the presentation. So I'm going to give you an overview of the forecast so you understand how our forecast has been developed and how we see things and how we've been seeing things very differently and what's happening as a result of legislation. We're going to talk about the impact of the disruption. So the powertrain market globally is a $400 billion market. It's going to decrease in size by $100 billion between now and the end of the decade. So we're going to talk about that and some other examples. We're going to walk you through some opportunities. So one of the opportunities we're going to look at as we go through this presentation is the battery, and what kind of opportunity does that create as far as the battery. The other thing that I think is really important is for 30 years, the industry is focused on how do we get as efficient as possible. So when I started in the industry, and if you're an executive running a business in this industry, more than like what you've done is you've come up with lean, Kaizen, et cetera. It's about how do I continuously improve? How do I continuously improve? How do I remove all of the complexity and variation in my business? Now what's happening is variation is coming in like we've never seen before. And one of the big changes is the whole value chain changes. So as a result, I want to talk to you about that electrification battery value chain and how it looks very different than what you're used to. The last thing that I'll talk through is then just some select material activities so that you've got an idea, what kind of opportunity is this for me, and where do I go, and how do I compete based on some competitive intelligence from some of these different sectors. So with that, I'll go through the first area, which is the forecast. So one of the things that, as I mentioned earlier, that is really different between the forecast that we developed to sort of drive this understanding is we have a top-down legislative view of the market. That's very different from what you're going to see from IHS, LMC, et cetera, which is more of a market-based forecast. So one of the things we look at as you go through this is we look at all the legislation around the globe. This is updated for the latest information as we have it. And what you see, what we've done is we've gone ahead and we've looked at this in the terms of the European legislation, which is CO2 emissions, okay, in the terms of grams per kilometer. The reason why we did this is because everybody, if we look at the United States, what do we have here? We have CAFE, we have greenhouse gas emissions that comes from the EPA. We've got the California Air Review Board. So what we wanted to do to be able to present this to you is give it to you all in the same context. And really, if you look at Europe, Europe is the major driver when it comes to this legislation. So we put it all in the terms of Europe. So what does this mean to you as far as so that you can quickly understand this? 130 grams per kilometer is roughly about 32 miles per gallon. Over the course of the decade, right now we're at 95 grams, which is the equivalent of about 54 miles per gallon. That drops in 2025 to about 69 miles per gallon. And here, 59 grams is equivalent of 91 miles per gallon. So you're probably asking yourself, how in the hell do you ever meet the requirements of 91 miles per gallon with an internal combustion engine? And the answer, as I'll show you in a couple slides, you don't. You got to have EVs. That's the driver of this legislation, and you can see the path that the United States is on. Now, one of the things is you're probably all aware, the Trump administration had made a proposal that they were going to freeze the legislation, which is close, much closer to what you see Europe was at. So we'll talk a little bit about what that impact was. So as I mentioned previously, we built this forecast to look top down. Okay, where is the legislation? What is it going to take to comply? And when you look at this in those terms that I gave you, specifically here, 130 grams, how many vehicles, which is based on the averages around the globe, meet that? Well, none do. Okay, so when we go to 95 grams or we go down this, what type of compliance do you have to be able to meet the legislation? Well, basically, all that you see are plug-in hybrids and EVs, when you get to this, are going to meet the compliance. So what's driving this high mix of EVs and plug-in hybrids? It's this right here. So what we did is we've built this global forecast, and basically looking at the legislation around the globe, we take the top OEMs, what kind of vehicle mix do they have, where is their gap, and what are they going to have to do to fill that gap, which we assume is mainly going to be driven by plug-in hybrids and EVs based on the credits they get from their local government, and we build this forecast. Let me walk you through what we see in North America, and again, with the assumptions of the Trump administration, the Biden administration, and the Obama administration, which was the previous legislation. So again, we looked through this, and basically what you saw with the Trump administration is absolutely no market, or I should say, no legislative need for any type of EV adoption. That's what the data tells us as far as the Trump administration proposal. Now, when we looked at what was the previous legislation under the Obama administration, basically what you saw was this driver of just about 3.9 million EVs, which is this right here, which is, as I showed you, the existing legislation. Now, if we look at the Biden administration, what the Biden administration is proposing is actually drives the need, which is actually lower than the market need, the market forecast was, which is 5.2 million units a year have to be EVs to be able to comply. You've got roughly then about 65% of the market is still, 65–70% of the market is still going to be a base internal combustion engine based on compliance with legislation. Now, what you're starting to see from LMC, IHS, et cetera, that now the adoption is starting to accelerate, not only here, but other parts of the globe, not because of legislative activities, but more market pull. I mean, who would have thought 3 years ago that, as a matter of fact, I was given a presentation like this. It was a dinner presentation. Everybody had sat around, had drinks, and then I gave the presentation. And it was a group of foundry executives, and one of them said, I just talked to Mary Barra yesterday, and she says this whole EV thing is a bunch of malarkey, And now look what Mary Barra and GM have announced since then, okay? Oh, well, we see an all EV future. Then they came out and said, oh, well, you know what? By 2035, we're going to be an all EV company, not hybrids, not EV, solely EVs. And then, of course, yesterday, they just made a $7 billion investment. So as a result, what we're seeing is this acceleration of this in the marketplace around this trend. So what's the impact? I've shared this in previous years. So what you see here is the consolidation, all the parts that you see really around the powertrain today, this 550 parts. The mechanical system is basically the e-drive, which is a very simple gearbox. Now, I worked for Magna in their powertrain business. We made transmissions. To give you a little idea, here is an $1,800 transmission. This gearbox is about a $250 gearbox. This one nowadays has 8, 9, 10 speeds. This one has 1 speed, $250. Huge difference as far as the systems. So what does that mean to powertrain? Really, what you have here is this $400 billion market that, as a result of what we expect here between now and the end of the decade, that means that market's going to decline to about $300 billion. $100 billion loss. What I've used in previous years as far as examples here is if we look at castings, okay? So if you look at castings, here you have an 80% decline. If you look at forgings, you have another 80% decline. If we even look at plastics in vehicles, what do we see? We see about a 30% decline in the amount of plastics that's used when you switch from the internal combustion engine to an EV. Now, some of the things I also wanted to talk about, and it was talked a little bit about earlier, is if we look at the systems, the auxiliary systems that are impacted that people just don't appreciate, this is a huge one, okay? And here I have a quote from Elon Musk. So Elon Musk talks about, hey, when we built the Model S, we had 3 kilometers worth of wire harness. The next vehicle we built had 1.5. Now today, we have less than 100 meters of wire harness. Why do wire harnesses change significantly? Because you go to a skateboard concept in vehicles, which dramatically enables a huge change in how you handle wire harnesses. Another example, which again was talked about a little bit earlier, is look at the HVAC system. And the HVAC system, now what you're going to start to see from OEMs is a lot of radiant heat. Why? Because you don't any longer have the waste heat coming off the engine. So that enables a lot of change as far as heated armrest, heated door panels, heated seats, neck warmers, heated steering wheels, etc. But what does that mean to other areas of the vehicle? Well, this significant reduction in the size of the instrument panel. So if we look at the instrument panel for an Audi A7, you have 27 kilograms. When you go to a Tesla, you go to about 18. That's about a 35% decrease. And you know what? Every OEM design department wants this because it creates a bigger feel of your cabin. It gives you more space. It's a minimalistic look that consumers desire. So a huge change that you're seeing as a result. And here's just a couple of examples. So again, what I said is, hey, I can talk to you all about consolidation, because consolidation is going to be a huge way that organizations are going to make money, not just private equity, but also many of the organizations here are going to have that as a strategy. But I thought what I'd talk about, so it's not all doom and gloom about consolidation, well, where's the opportunity? And one of the obvious opportunities is battery packs. This is an area where we spent a lot of time that I thought, let's go through it and let's start talking about the opportunity. And the first thing is if you're just now developing your strategy and you're saying, hey, what do I need to do from an opportunity standpoint? Here's one. Why is this an opportunity? Is because the system has not been optimized yet. And I'll explain a little bit about what I mean by that. But if you look at this, this is the standard way of making an EV. Okay? This is the skateboard concept, which has really been developed at Tesla. Now everybody uses it. It's the most efficient way to make an EV. And one of the interesting things that came from GM in their battery day a year ago now, what they talked about was the skateboard concept and what they were doing. And today, GM globally has 550 engine transmission configurations. When they go to their all EV future, they will have 19 skateboard configurations. Now think of the complexity reduction for an OEM. Now if you think about it, EV OEM utilizes only 60% of the space, so there's space there. But think of the part complexity that you eliminate when you go to this. So you want to participate in EVs. Where do you have to participate? You have to participate here, because GM is focused on scale, size, etc. If you're not participating here, you're done. So one of the things we used to talk about in the powertrain space is, oh, are you on the 8-speed? Are you on the 9-speed? Are you on the 10-speed? And if you got on those, you had survival. If you missed one, oh, we got to get on the next one. If you're not getting on the skateboard, you're done. And if you're not getting on the skateboard today, you're done. Okay? So this is, you can talk about strategic planning. This is where you got to be winning. Okay? So let's go through. We started to look at the Leaf. We started to look at the new systems. And again, I'm going to walk you through the battery, but I've talked a little bit about some of the others, where there's going to be opportunities. There's going to be plenty of them. But let's look at the battery pack. And one opportunity for many of the companies here, especially when you think about, hey, forgings are going away, castings are going away. How do I participate? Plastics. Let's start to think about this from a standpoint of the sub pack, which is 50 kilograms, and the battery pack itself, which is about 60 kilograms. So if we look at those systems and we start to tear them down, if we start looking at the sub pack and the core elements of those systems, which today is steel, and why is it steel today? Is because the OEMs feel comfortable working with steel and they're in a rush to get EVs to market. So we have done 300 interviews with OEMs on this issue alone. And what they will tell you is they have not had time to optimize those systems. This is the opportunity. So when you start to look at this from a standpoint of where the opportunity is, you see the sub pack. And then if you look at the battery pack itself, here's where that 60 pounds is. So what is happening right now in the industry? Well, you have the steel industry, you have the casting or the aluminum industry, and you have the plastics industry, which are starting to converge on these opportunities. So specifically, where is the focus? The focus is here. The OEMs are doing countless assessments right now of different materials, different manufacturing techniques to say, hey, how am I going to optimize this? So if you're going to participate in that skateboard, if you're going to participate in these type of opportunities, here's where you've got to be thinking. So the next thing, which I think is really important for you to be thinking about, is it's a completely different value chain. Again, many companies for the past 30 years, you've been selling the same product. It's been the same value chain. There's been no disruption. It's been consistency. Now what you have is the epitome of the opposite. It's complete chaos as organizations are trying to figure out how are we going to optimize those systems. So the first thing is if you're going to participate in the battery packs, one of the things you have to think about is what does that new value chain look like? And right now, I would ask by a show of hands, who knows who CATL is in the room? Okay, one. Okay, CATL is the largest battery manufacturer in the world. As a matter of fact, as you can see here, they have relationships with virtually every OEM. The interesting thing is 11 years ago, CATL didn't exist. CATL, like I said, is the largest lithium-ion battery producer in the world. And they have relationships with all the OEMs, and nobody here has heard of them. Okay, so you have a whole new value chain that's starting to emerge. And what you have in this is you start thinking about your components for battery packs is the sub packs, in a lot of cases, are being developed by organizations like CATL. So the value chain is very different, and the studying of the value chain is going to be very important for you to be able to compete. The other thing which is really interesting is if you start to look at this and you start to look as far as who's insourcing and who's outsourcing and how are they going about their strategies, and I would tell you this is in complete flux as they again continue to optimize. If you look at Tesla, BYD, they're completely insourcing their battery production. Tesla has a JV with Panasonic. They have a relationship with CATL. They've got a lot of different things going on. It's constantly in flux in order to meet their demand needs. But at the other end of the spectrum, you have some OEMs who are completely outsourcing that at this point in time. At this point in time. But more than likely, what you're going to see is the OEMs, to be able to be cost competitive, they got to find ways to build scale. So if you think about OEMs like Mercedes, for instance, Mercedes has said, hey, we're going to offer an EV, a hybrid, and an ICE option for all our vehicles. Well, you know, like I told you, well, to be competitive, you got to have a skateboard. Okay, in that model, you can't have a skateboard. So what are they doing? They're going to somebody to say, hey, I want to outsource, you know, you make my EV, but that's a short-term interim step. By 2025, what you're going to see is they're going to get rid of that strategy and it'll just be EVs going forward. So as a result, this is a value chain which is in significant flux as a result of all the different iterations that we're starting to see in the vehicles. So the last thing, again, is we start to think about this, and we talked about this before. We want to leave some time for questions. So this is really the last slide to go through. But again, if you're a steel company, if you make steel components, aluminum, castings, plastics, etc., what we did is we did some competitor analysis to start to say, hey, as industries, how are they looking at this battery space? Again, I figured this would be interesting for many of you to hear. Well, if you look at it, steel's the incumbent. The OEMs feel very comfortable with that, but that's maybe not exactly where the optimization is going to come. And frankly, as an industry, they've been lucky, but they're really not focused as far as how do we participate in this. We've looked at the aluminum space. The aluminum space is really focused on the enclosure, but nothing else. So where do you see the big players coming in? The resin companies are much more focused on how do we participate. They realize, hey, we're losing volume as a result of the switch. How do we make that up? Where do we make that up? Battery enclosures is a huge part of that. So with that, that's my presentation. I guess I'll leave it for any questions that anybody may have.
Is that clear about what we talked about strategy earlier? This is happening, and it's Paul's been pretty spot on. This is tremendous change. I think tremendous opportunity, and yes, lots of risk. Do we have questions for Paul? Anyone? Perfect. I think everyone's kind of a little stunned. There's a lot going on, and there's no doubt the battery pack is something that we see tremendous opportunity also, because there's so many new skateboards coming out. I mean, it's going to be a plethora of opportunities for sure. So again, we want to thank you. We'll be here for, join us for, a few minutes here afterwards. But again, we want to thank you for joining us. And also, again, our goal is with our outlooks is always to be, hopefully it's strong thought leadership that, information for you to make good decisions. Please reach out to us. We're happy to help. And I think Paul will be here afterwards for any other questions. Thank you so much. Yep. Have a great afternoon. Thank you.
Yeah. Thank you.